I've been trading for the last 4 years and I've spent thousands of hours studying charts and thousands of dollars on courses and mentorship to figure out what actually works. But no matter what I tried, I kept losing money and blowing accounts. And eventually I got tired from chasing strategies, so I decided to scrap everything and start from scratch. I simplified everything, focused only on what actually moves the market, and I built a system that I can follow every single day. And today, trading is my full income. So in this video I'm gonna break down the whole strategy that I'm using every single day. It's simple, it doesn't require indicators, and it's something that you can repeat every single day. So let's get into it. Alright, so the first thing I want to show you is the PNL that this strategy is generating me. So you can see right here all of my wins, all of my losses, and you can see that this strategy is generating around 80% win rate. So now that you know that I'm not showing you something that I don't use, let's actually get into the video. So what's the goal of today's video? So the first thing that we are going to learn is how to identify a clear, simple A+ setup. So that is basically a trade that is going to have an 85+ win rate. The next thing will be that you will learn a one trading setup that is repeatable and mechanical. So the setup that you will be executing will be repeatable and it will be completely mechanical. So you will not need to actually second guess the trades and worry about if you are going to make mistakes, because it is going to be like a checklist. The third thing is going to be that you will execute trades with clarity, so no guesswork as I just told you, and no emotions. And that is really important because we do not want emotions to mess up our trading. And then the last one is we are going to learn how to focus only on the best quality setups, because that is going to increase our win rate. So if we manage to only take the best quality setups, that is just going to keep our win rate the highest. So has this actually ever happened to you? So we have a chart right here in front of us. So you, for example, break out towards the downside, you break these lows, and we get a strong displacement to the downside. And now your instant thought and thought of a lot of traders is gonna be to short the market. But the point is that the market actually don't function this way, because in the end the markets are not just breaking out of some lows or some highs and then continuing going that direction. And that is the reason that we do not want to trade strategies that do not make sense logically in the market, because why would the market need to continue down when all it did was a simple breakout right here that you just don't know if it's gonna push the market lower. So what we want to do is we want to right now go and learn an actual model that is based off key confluences that the market is actually moving based off. So for example, right here we see that this higher time frame is extremely bullish. How do we see that? Because it is really clearly just going to the upside. Also 4 hour, you can see it really clearly making structure to the upside. And then for example, when you know that higher time frame is like this bullish, but then you go to the lower time frame, for example a 1 minute time frame, it is gonna be really messy. So you are not gonna know whether we are gonna go up or down or what are we gonna do. So the point is, when you are confused on the time frame that you are actually on right now, so for example this one, when you just don't know what the market is doing, you have to change something because something is wrong, because you're gonna make mistakes right here. So what you have to do is you have to just zoom out and look at a higher time frame. So if we zoom out from the 1 minute time frame, then we can clearly see what the market is actually doing, because in the 1 minute time frame it is going to look completely insane like this. But then if we zoom out, we are going to understand that we want to see something happen to the upside to get a setup. So we are going to have three main ways that we are going to get a setup. So the first one is going to be a retest and continuation. The second one is going to be a sweep. And then the third one is going to be the one candle rule. So right now let me show you all of those setups. So the retest and continuation is going to be done on the higher time frame, and of course entry is going to be on the lower time frame, and it's the same for all of the ways and all of the setups. So for example right here we see that we are breaking structure to the upside. So let's say that this is 1 hour time frame. So we have in total 3 breaks of structures to the upside. So right now, since the setup is called retest and then continuation, we want to, of course, after the break of structure, we want to look for a retest of something. So in this example, what is that going to be? That is going to be fair value gaps. So for example, after this break of structure right here, of course this displacement to the upside, what we did is we retraced into what? Into a higher time frame fair value gap. So a fair value gap is a 3 candles formation, so 1, 2 and then 3, and then from the wick of the first one to the wick of the third one, if there is still space left like this hole, that is a fair value gap. And you can see how beautifully we retested it and bounced back to the upside. So right here is where we are going to enter the market. I'm going to show you exactly how, don't worry. But then after that, what we have is another break of structure to the upside, strong displacement. Then we slowly retraced into what? Into a fair value gap right here. And basically you can see right here is a fair value gap. We tapped in right here and bounced back to the upside. So right now what we want to see again is a retracement into the fair value gap, and basically that is going to just get us setups in the trend that are looking like this, which is going to be insane. So right now let's go on to the sweep setup. So basically you can see right here that we are trending to the upside and we just broke structure. So this right here is not a sweep because we actually displaced to the upside and broke structure. So the next thing that we do is we are actually going to sweep. So after we are breaking structure, for example, to the upside and making an uptrend, we are going to leave some lows like this one right here to the downside that we can easily go down and then manipulate and then just go back up. And why are we going to manipulate those lows? What is the logic behind it? So the logic behind it is that on those lows like this one right here is going to be a lot of stop losses. And why would that be on those lows? Because all of the people are just seeing an uptrend, and what do? They enter based off of the pullbacks. So they enter long positions to target something to the upside, and then what the market is going to do, it is going to come back, actually sweep their stop losses, which means extracting money from the markets, and then it's going to continue heading to the upside to a real move. And basically our setup is going to look something like this. So after the manipulation, we are going to get our entry model, and then we are going to just aim for the recent high in the market. And then we have the one candle rule setup. So at 9:30 a.m. Eastern time, we are going to have a candle that is going to form exactly on the market open. We are going to mark out our high, our low. So basically this can be a 50-minute time frame candle, this can be a 5-minute time frame. It works pretty well on all. My personal favorite is on the 15-minute time frame. So basically all that you do is at 9:30 you mark out the 50-minute high, 50-minute low, and all you are looking at is how the next 50-minute candle is going to basically close in the market. So for example, when the market starts going, at the first it may look like this. So if it closes like this, then all we are going to do is we are going to target the opposite side of that candle. But then if in the end we actually close like this, so we close with kind of a break above, so with a body we close above that high, then we are going to look for some kind of long position to the upside. But if we close like this, then we are just going to look for a setup towards the downside, towards that 50-minute low. And now one confluence that is going to be the same for all of these is going to be an entry model. So entry model is always going to be the same, and it is going to be a disrespect of the fair value gap. So basically a long entry is going to be when we make a fair value gap while going to the downside, and then we disrespect it to the upside like this. So basically close with a body above, we are going to enter the market right here and target to the upside. And then a short entry is going to be when we create a fair value gap while going to the upside and then disrespect it towards the downside. So what we do is we enter right here and then we target towards the downside and expect a move towards the downside. So all we do is we are waiting for the disrespect of the fair value gap, which makes us sure that we want to head that direction. Okay, so as you can see right now it is 9:29 in the markets, so we are actually ready to start waiting for some setup. So the first thing for the first setup, which is going to be a retest continuation setup, we are going to scale up to the 50-minute time frame and we are going to check if we have a delivery. So in this example we already have a delivery, so you can see that we are in a uptrend. So for example, this was the delivery of the last move that we did a break of structure, and now we have a new delivery right here. So all we want to do right now is get an entry towards the upside and a continuation towards the upside. So the entry is going to be done on the lower time frame. So for example, we want to look for the fair value gap that basically can get inversed, for example like this one right here, that we can target something to the upside with. So for example, right now all we have to do is wait. So the market is very volatile. So right now we do have a fair value gap right here. So this 50-minute, it's really important that you understand that it's still getting respected, and also this one down here also got respected. But the point is that this 50-minute fair value gap still hasn't been disrespected because the 50-minute closure hasn't happened. So we can easily leave a massive wick right here that is still completely respecting it. So right now all that we want to see is, for example, this fair value gap right here get inversed. So I'm going to move this by the side to see if that is going to be the case. So we still didn't inverse it, and there it is. So basically what we right now do is we enter the trade, we put our stop loss somewhere below the fair value gap or the candle, and basically if we zoom out into the market, let's say to the left, we can maybe target some of these highs right here. So for example, if I extend this high right there, it is going to be exactly 2.3 risk to reward. We can also go to the higher time frame and see if there is any more highs. So basically that is the highest high there. We can also target maybe fixed risk to rewards, but for this example, let's see if this is gonna be alright. So if I fast forward the market, that hit beautifully our take profit, and let's see where the trade is actually going to go. So you can see that trade actually went to really huge risk to reward, but what's important for us is that our take profit got hit and that the trade and the setup really played out great. Okay, so basically on to the second example. So right now you can see on the chart that we are slowly starting to head down. So we started to create that break of structure to the downside, followed by a retracement and then another break of structure. So now what we have here is a retracement, and all that we are expecting to see from the market is going to be either a retest of this right here, and then of course with that we are going to get that sweep setup alongside with that retest setup. So that's going to be really powerful. Or we can expect another break of structure to the downside and then a potential setup after that. So basically let's see what the market is actually going to do in the end. So right now in this example, looks like we are actually going to get, yep, we are going to get that sweep. So we have now swept that liquidity from all the people that entered right there, and then we also retested this fair value gap right here for a retest. So now we want to see a continuation. So all that we do is when we enter a setup, so let's say this setup to the downside, so we enter it like this, we can target to the downside. So we are not going to target only this, we can actually scale out and we can target some kind of structure to the left. So for example, let's see if this low right here is going to get hit for 1 to 3 risk to reward. So if I fast forward the market, let's see what will actually happen. All right, so almost, and there it is. So perfect 3 risk to reward trade. So for $1,000 risk, you would make $3,000 on this risk to reward. So right now I'm going to show you how the first candle rule is going to function in the market. So for example, I have let the market play for 5 minutes. So you can right now see that it is 9:35. So all we do is we go to the 5-minute time frame, and all that we do is we wait for the closure of this candle. So that candle is basically going to tell us if we are going to go to the upside or if we are going to target to the downside. So if I fast forward the market, this was the final candle closure. So all right now that we want to actually see is either continuing and then retesting here and then a continuation, or we want to see a retest right now and then a continuation to the upside. So basically either one of those can happen. So let's see the first one. All right, so we headed to the upside, and looks like now we actually had that kind of retest to the downside. So we actually retested this fair value gap right now. So we go to the lower time frame, so for example a 2-minute time frame to enter. So there is no fair value gaps to enter the market whatsoever, and let's see what the market is actually going to do. So we actually have a fair value gap right here that we can enter based off of. So right now we still didn't disrespect it. So what are we going to do? We are going to play one more candle out. You can see that that was a disrespect. So what we are going to do is we are going to enter the long position. We can put our stop loss right below the candle, and basically we can target the high up here. So let's see how this trade is going to play out if I fast forward it, and there it was. So 3.4 risk to reward. So really beautiful trade. Alright, so if you like the video, make sure to subscribe to the channel and also comment some questions if you have any, and also check out other videos on the channel. Also, if you are maybe interested to get mentored by me one-on-one, make sure to check out the description because there may actually be some spots left. So also book a call so I can actually see if you are a right fit for the mentorship. And also what you can do is you can check out the description for maybe some free stuff that I'm giving away. And basically with all of that being said, I'm gonna see you in the next video. Peace.